Good evening, everyone. Hi. Welcome to this recording. The reason for this is for me to, there are three main items that I wanted to touch on. So the main focus is basically how to take my fierce trade house alerts. Okay, how to take them, how to literally take them. There were three items. So the first suggestion that you guys wanted was to kind of give you guys a tutorial of how to take my trades, which is what I'm doing right now. And then secondly, so that's the first thing. Then secondly, help you guys determine which currency pairs to trade. Third is help you guys determine where to get out of the market. So do you take TP1? Do you take TP2? Do you take TP3? And I'll probably also cover stop loss, okay, if that's okay. So first of all, so let's look at this trade that I called on Thursday. So we have US 30. This is on Wednesday. Okay, so let's look at, I want to look at Thursday, the last trades. There's a London session. Okay, we can look at any US 30. So US 30. This is it. So Thursday was the 19th, right? So the 19th of August. Okay. Now the call was at 10, so it's around 10 o'clock. Right about, wait. On the 19th, so around 10 o'clock here, right? Okay, so this candle here is the 8 o'clock candle. Is it the 8 o'clock candle? Sorry, guys. Was it a sell stop or a buy stop? It was a buy stop. So it was a buy stop. Buy stop 34,646. So buy stop 34,6. So I'm just gonna try and put it where it was. So 646, 645. And then I kind of forgot to put the stop loss. Okay. Now 34,646, and we called it at about 10, right? So you can see what happened. This is 12, this is 11, this is 10. So by the time you put in this trade, it had pushed down and then it went up and hit whichever targets up here. So we were targeting 200 pips. So really, we didn't really have a drawdown of the trade. Actually, I didn't give a stop loss, but it's one of those trades that, let me go on the lower time frame. It's one of those trades that really didn't meander a lot. This is 11. So 11, it kind of, stuck around the entry and then pushed up. Okay, so for example, 36.46. Sorry, we're not even near where I'm supposed to go. What was the entry? 34.646. Sorry, guys. Now, let's say, for example, okay, so I didn't put stop loss, or you were left behind. You saw the trade had already executed. I called it at 10 as a sell stop. So by the time you're looking at your phone, the trade is already running, and what do you do? Okay, so there are two things you can do. One, you can ignore the trade. It's already gone, right? It's already triggered. Or based on what you're seeing happening, you can time it and wait for it to, like, you can look at the chart, you can come back to the chart again and look at what I've given, the parameters, plot it on your own chart, whether it's on your phone or on your trading view, and then see if the possibility of it going our way. So why this trade was a good trade to go our way, regardless, was, if you look here, this was the low of the day that day. Okay, this was the low. So, and US 30 had been dropping. Now, if you guys understand market structure, we can see the low, we can see the high. Okay, these are, I've put these on my chart. Okay, I've put them on my chart so that I can be knowing the highs and the lows of the day. So I already, the reason I called a buy stop was because I already knew that this was actually going to be, was actually going to push up. So the trade started going down, and my take was like, I was anticipating it actually to push lower. But then it didn't. It just hit slightly above our low. I actually thought it would come straight to our low, and then it started pushing up. And then that was a clean trade, and it went on up. Now, like I said, either if you're left behind, don't take the trade, or get on the chart, look for the high and the low of the day. If I've given a sell, how far is that trade? If I've given a sell, how far is that trade from the high, the low of the day? If I've given a buy, again, how far, and it's moving down, how it's moving down, right? And I've given a buy stop. So I want it to push up. How far is this, from the low of the day? Has it already bounced off the low of the day? Is it, because then that will give you confidence. If you start seeing it pushing up, okay, you could actually jump in. Now, if you totally miss this trade, you can see something happen later on in the day, at around the next day. This is a trade that you can actually take again. Okay, you can see it bounced off the same level. And if you look at market structure, if you guys understand market structure, this rejection, we are seeing a low here, a higher low, a higher low, this would just tell you that now we are done with the low and now we're headed towards the high. So depending on your understanding of market structure, guys, and sometimes it's very hard for me to gauge where everyone in my signals group is at what level in terms of understanding how to trade or look at the charts or analyze the charts. My take is, one, if you miss a trade, just forget about it. If you are a bit more advanced, you can go to the chart and look and see, okay, Lillian called a buy stop. Has it already activated? No. Okay, if it hasn't, then you're good to go. I mean, an activation, has it yet gotten to the 10 pips target and so on and so forth? If it has gotten to 10 pips, what is it doing? Has it reversed? Okay, is it still valid? So I know sometimes it can get frustrating because the market moves very fast. Someone told me that sometimes by the time I've called the trade, it's already executed. Yes, it does. Think about US 30. If US 30 executes and gold, usually they really, really move because of the usually my timings in the market during the London session, early session, the market is really moving. So it's not going to drag. Usually the market drags towards the end of the week, but during the beginning of the week, it's a bit faster. So, so this here was a good indicator. Then we can see things like, we can see this candlestick here. There's a bullish engulfing candle. This is also confirmation that we are actually buying, right? So again, if you guys also understand candlesticks, those are things that I give you an idea. Then we have some rejection at the bottom side. So again, if you missed this trade at entry, just come back to the chart and look for things like rejection, bullish engulfing. Where is it vis-a-vis the low and the high of the day? Okay, and then say, oh yes, so that makes sense why Lillian called a buy. So if this is still too technical, I really recommend, guys, you probably just come for a one-to-one mentorship or join one of our classes so that I can just break down some of this concept, because it's very hard for me to do that here right now. So that's the first thing. If a trade executes and you're not in the trade, just ignore or jump onto the chart, depending on the timing of the time I call the trade and the time you're seeing the trade, and just see, is it still viable? Okay, and this will now require you guys on an individual basis to assess it. Sometimes I'm not in the charts anymore to be able to look, and I don't even know if all of you have taken the trade or not. I'm not really sure. So I hope that kind of answers your question. I hope so. And also you can just all ask me in the chat. If you're late, just ask and say, I'm just seeing this trade right now. Is it valid? Can I re-enter right now? And I will quickly look at the chart on your behalf, and I will respond in my knowledge and tell you yes or forget about it. Okay, so that's question number one tackled. I hope that's clear. Now, question number two is, what is a buy stop? What is a sell stop? Now, and these are not direct feedback that I got that you guys are asking me what's a buy stop, sell stop, but just based on some of your responses, I realized, it just occurred to me again that we actually have different levels of traders. We have brand new, like I said, we have intermediate, we have advanced. So that means that if you're brand new, or you've just traded for a couple of months, maybe you missed or skipped the class on for the different types of orders. We have buys, we have sells, and we have the pending orders, which are the buy limits, sell limits, and the buy stops and the sell stops. So I'm just going to, you guys will notice I gave a lot of pending orders. I rarely do buys. I mean, if you look at most of my trades here, they're just pending orders: sell stop, buy stop, sell stop, buy stop. That's it, sell limit, and so on and so forth. Why? Because sometimes the trades are not yet ready to be jumped in at that particular time. And because I'm just looking at the market for like an hour, I don't want to spend the whole day waiting for a trade. So I'll be like, okay, when this trade gets to this level, then it can execute, right? So I'm sharing this for those people who maybe joined the signals group and hadn't had a lot of experience trading pending orders. Okay, so for example, we go back to what is a buy stop, sell stop. So this is basically what it is. So assuming that this is a level, right? This is the entry price. This is where I'm telling you guys you can jump into the market. This is your EP. EP here being entry price. Again, somebody else talked about terminologies. What are the acronyms? So I'm just going to type it out. This is the entry price, right? And what I'm saying is at this price of 35, you guys can see the price they're moving. At this price of 35,805, if I give a sell stop at 35,805, this is basically what I'm anticipating. Price is literally just supposed to come down. So meaning that as price is pushing down, as soon as it gets to this level, the trade will be triggered. Okay, so this is a sell stop. Now, a sell limit is almost similar, but it has an additional parameter, okay, or an additional algorithm. I don't know what else to say. So the price comes down, okay, but it will retest a previous level before it goes down again. So sometimes I'll anticipate that price will actually pull back. It will get to that level, yes, sell stop. But then sometimes I'll be like, no, it will get that level, but I have a feeling it will retest and then go down, okay? And we've seen that a lot. And that's why I started saying, okay, fine, instead of giving sell stops on some pairs, I'll give sell limits. And I do a lot of sell limits now. I'm beginning to do more on the golds and the US 30s because they really pull back. And the trade is still going in the direction I have anticipated. So basically, this is a sell limit example. Okay, so this is a sell limit and SL. Okay, let me say sell limit. Okay, a sell limit. That's a sell limit. And then this here is a sell stop. This here is a sell stop, okay? So that's the difference. Sell stop, price is just going to drop. I'm not anticipating it coming back. Sell limit, I'm actually anticipating it coming back. Now, when you want to reconfirm again, okay, whether a trade is viable, just check it out and see, okay, fine, is this thing, yes, it has possibly hit my stop loss and pushed below, but is it really reversing and changing direction and going back up, or is it just a small reversal to continue to the downside? Those are the things now as a trader you need to be able to confirm or reconfirm, okay? Now in this scenario, this is a buy stop. So if you're looking at a buy stop and when you're looking at the opposite of a buy stop and a sell and a buy limit, the opposite is true, right? So we have this here, and then we have, you know, we want to buy, right? So my anticipation is that price is just going to push up and keep on moving up. So this would be my buy stop. This is my entry price here. Entry price. And I'll be like, you know, and then this is my buy stop level. So I want to buy at 36,397. I'm not anticipating price to come back down. Okay, so this would be a buy stop order. This would be my buy stop order, right? And usually I give a short acronym BS, not like BS, the real BS, but like BS, if you guys know what I'm saying. So that's BS. And then if I'm looking at a buy limit, this is what I'm anticipating. I'm like, price, yes, is pushing up and it's going to go up. Okay, it's gonna go up. But I'm also thinking before it actually breaks to the upside, it's going to reverse and then continue to the upside, right? So this here is the second type of a buy order, a buy pending order, which is a buy limit. Okay, so guys, I hope that explains to you, especially if you've been confused about buy stops and buy limits and sell stops and sell limits. I hope this illustration here kind of gives you an idea of the same. Okay, so there's no confusion. So I've tackled concern number 2. Now, concern number 3 was, where do I get out? Okay, do I take TP1? Do I take TP2? Do I take TP3? Do I just get lost? You know, so this is the thing, right? So we have, let's look at this trade. This is a Thursday trade, Euro JPY. Now I want to do this practically so that you guys can, I always say sometimes explaining some of these things visually is way easier than trying to. So buy stop Euro JPY, the entry I gave on this trade at 10:49 was 128.342. 128.342, bang, right here. Okay, it's about 343, but you guys will get the deal. And it didn't go far, did it? No. Let's see. This is 10:49. So let's say around 11 o'clock. Yeah, it actually didn't fire. It got to about 11 pips and then it dropped. So this trade here, okay, it got to 11 pips and then it dropped and hit stop loss. Fine, so we were kicked out. Now, this was the one trade that we got, what we actually got kicked out, one of the trades that we got kicked out. Now, in this scenario, but the thing is, the first TP was hit, 10 pips was hit, right? So if you took your 10 pips, you were hit. I mean, you got your 10 pips, you're happy. If you were targeting 20 or and above, you actually got stopped out. But then later on Friday, the price pushed up again. And now it looks like it's going to push up as we open the market tonight. So yeah, we'll see how that pans out. But the thing is, when this happens, come to the chart again and look at it and say, okay, fine, is this thing going to keep on pushing up? Okay, so again, you will look at market structure and we can see that it dropped, it got to the low. So the low of the day, and what we see, okay, when it got to this low was that, and this was the next day. So the same day, that day, it just dropped. So it's not really a viable trade to jump into again. And for me, I saw when this thing, you look at it and say, okay, fine, it started reversing. Or rather it was a continuation. When you look at it on a longer term, you just come and you're like, okay, fine, this thing is actually dropping. Okay, so this was a premature call on my end. Okay, for me, I thought it had already gotten to its low, but then, it didn't. So it was still kind of pushing lower, which happens, right? But now it's for you guys to be like, okay, do we jump in again? So in this case, you wait. And as we can see, we saw this low being formed here. If you guys know how I teach when I'm teaching my classes, for those who are in my classes, you know what this means. We can see, price was just basically grabbing some liquidity here and now bouncing off. Then then we can see some consecutive bullish candles beginning. Now it got back to entry at some point here. Okay. And then what it did, it began to break structure. So it broke past this high and then it retested back on this level. So chances are this thing is just going to continue pushing up, okay? So this may not have been a trade you'd want to jump in again because it's a Thursday, it was a Thursday evening. Thursday evening is not necessarily a good time to jump into a trade because the market is also slowing down for some pairs like Euro JPY, and especially because we had already gotten to the low of the day, which happened. Now, let me look at another trade that actually maybe hit stop loss and then continued. I'm not sure which trade. Let's look at UCAD that was on the USD CAD so that I can answer the third question or the third concern. So let's just delete that. UCAD buy stops. So that was on on Wednesday, right? Entry EP 1.26136. So that is the entry price. And that was on the 17th on Wednesday. 1.23. Wait, was it 3 really? 1.26. Sorry, I was going to wonder 3. 1.26. 136. Okay, so 136. We can see that's where we are at. So around there, right? So I call this trade at about what, 4 p.m. Okay, so 4 p.m. on the 16th. So I'm just gonna put it there, like what, 4 or 6. Okay, so 4 or 6. It's around 4 o'clock, the 4-hour candle. And hold on. Just want to put the exact end. Okay, there we go. So 1 point, almost got it. 136. There we go. Now my stop loss was 15 pips. You guys can see. This is what, 36. Okay, so this trade pushed up. This is what time? 9 o'clock. So it triggered around, this is 3:30, the 3:30 candle. So all this time, sorry, was this on the 17th? Sorry. So around here it triggered, it pushed up. Now, the trade pushed up to about 34 pips. So you got your TP1, TP2, 10 and 20 pips, and then a bit more. And then it pulled back to entry. Now, let's say, for example, you missed this trade, or somehow because of your spread, your entry, your broker kicked you out because the pips were very tight. The stop loss is tight, it's 15 pips. And the spread takes into account, you have to take into account the spread, because then it reduces your specific stop loss depending on the broker you're using. Now, if you get stopped out because you didn't take your profit here, look for a re-entry, okay? Look at the chart again, just monitor that trade again. If it doesn't drop and you're seeing it still pushing up, then it's valid. Now, why is it valid? One, it has retested at this level a couple of times, okay? It's just been here. And then finally, there was an aggressive, there was a rejection here. There was another higher low here. Okay, and then finally we broke this high here. Remember the initial 34 pips? We broke it. We went and retested and formed a bullish engulfing candle, and this could have been your entry at this level for this pair. Okay, based on just the way it was moving, we can see this is consolidation. And after this consolidation, this was a minor consolidation, and then the pair just pushed up. And this is usually a very common setup. Again, if you're in my class, I try to teach this setup quite a bit, break of structure. So those are break of structure here. There's a price action candle formation up here. Okay, bullish engulfing candle. This buy candle engulfs this previous candle, and then break structure and just pumps up. Now, this is the same trade. So what I'm trying to say, guys, is if you guys can learn how to relook at the charts, okay, you'll be able to still cover up. So even if you are stopped out at 15 pips, you can then continue. Now, do you take TP1 or TP2 or TP3? This is the main question I'm trying to answer. This is going to be dependent on you. I don't know what your trading goals are as a person. Now, as Lilian Okado, I'm looking at my risk to reward, and I've done a video on risk to reward on my YouTube channel. I'm going to really recommend, guys, please watch it. It's free. It's really, really key. I have 2 risk management videos. In fact, I have 3 risk management videos on my YouTube channel. One is pretty old, but 2 are recent. I did them last week on money management and risk management. Now, risk management, I speak about risk to reward. If you're trading and you're taking 10 pips, it doesn't matter even if you're taking my signals or you're taking your own signals. What is your risk to reward? So if it's 10 pips, so let me give you an example practically. If you're doing 10 pips, technically your risk to reward is 0. Okay, meaning you're risking 16 pips for 10 pips. You're not trading. You're not trading, guys. That's not how we do it. Okay. So basically, you want to be, and this will really depend on your confidence. You guys have traded with me. Some of you have traded with me for almost 6 months. If you're not confident about holding trades over these 6 months, then you still need to keep on trying to demo trade, because you will only break your growth barrier when you're able to increase your risk to reward. It's okay to take 10 pips and be out, people say 10 pips and dip, and out, and that's fine. But look at how much money you've left on the table. And if you're using a big risk to reward, for example, you don't even have to over leverage your account. Your 0.01 lot will still give you $20 if you just waited for this trade to keep going. And all you risked was 15 pips. 15 pips to get you 200 pips. This is a risk to reward of 12, meaning that for that specific pair, you've grown your account, you've grown that trade 20 times, like you've made 20 times on that one trade, as opposed to taking 10 pips and over leveraging, because that's the reason why people lose. Now, if you're taking 10 pips, for sure, I know you're over leveraging or you're tempted to over leverage. Now, the unfortunate thing is the way I trade, I use stop loss. So if you're over leveraging and you hit your stop loss, you're out of the game. But if you're not over leveraging and you have a risk to reward mindset and you have a mindset to come back into the chart and look at the chart again to see if there's potential re-entry, if you have that habit, because that happens, I get stopped out a lot of the times, but then I look at the chart and be like, hey, gold is still going up and I'm back in the original trade. So this is something I want us to start doing. I know you guys are just here for the signals in terms of just copy paste, but I also want you guys to just be going back to the charts and just reconfirming, because then you become confident. Even when I say re-enter the trade, because I don't know if you guys re-enter the trade when I do say re-enter the trade, especially when I say that for gold or indices. And I usually say that for gold and US30 because gold and US30, usually the risk to reward in terms of pips stop loss wise are usually higher than what I give for currencies. So I'm like, dang, guys just got hit 30 pips. So if this thing is still going in the direction it was meant to go, I'll be like, yes, please re-enter. So I'm hoping, I don't know if I've been able to answer that question, but the best way is the way I've explained it, by understanding your risk to reward. If you're okay taking 10 pips, please know this, that if, for example, that day we have a really bad trading day and you're taking 10 pips and you're risking 15 pips. So in 3 trades, consecutive losses, you've lost 45 pips, okay? But the 4th trade, you make your 10 pips, you'll still be in drawdown. But listen, if in 3 trades, you're down 45 pips, but this one trade of USD card gives you what? 60 pips? 60 pips minus 45 pips is what? 15 pips? You're still in profit. Okay, your account that day is still in profit. So that's the best way I can. So please know that when I am giving the trade, my mindset is I'm going for the TP, at least minimum 20, 30 pips. Okay, I'm either going for, okay, let me explain it this way. If my pips is 16 pips, my minimum risk to reward should be 1 at the very least. So I'm going for 16 pips. I'm going for 16 pips, I'm losing 16 pips. That makes sense, okay? I'm going for a 1:2. I'm risking 16 pips. I'm willing to take 30 pips off the table, okay, in profit. That makes sense, okay? But if you're doing 0.5, that means you're definitely going to be in loss at the end of the week. So I hope I've removed some gray areas in that sense, why some of you are not growing your accounts. I am really, well, that's one of my areas where I really want to help you guys improve. And I also would love to suggest that if you feel you need some more education, don't be shy, just reach out. We can get you on our advanced class and take you through, because guys, in as much as we're taking our signals, my signals are there not just for you guys to just copy paste them blindly, but also for you guys to learn from them. So I'm hoping that after every trade, you're able to go back to the chart and see, okay, how did this play out? If it made money, look at the market structure again. Like now you can be able to look at EuroCAD that pretty much went, 328 pips, you can ask yourself, why did it? You can see that it was targeting the high of the day. It had already gotten to the low here and it bounced off and it just rallied. You can ask yourself questions. You can look at the bigger time frame. Why did it behave like that? It had been consolidating. It broke a previous high here on the 19th of July. And when it broke that high, it just pushed up and then it's retested that high again. It's really almost back at that level again. So are we going to push up? Are we going to push down? Not to worry, I will cover that in my analysis video, which will be posted on my YouTube channel. But that being said, guys, I hope I have made some sense. I hope you now understand what buy limits, sell limits are. I hope you now understand that, you can always jump into a trade again. Even if I don't tell you re-enter, you can just go back to the charts and recheck. I hope you also understand that risk to reward is important. So if you're targeting 10 pips, and you get stopped out multiple times, then you have a ways to go to actually catch up. So you're better off holding the trade. And holding the trade, guys, can only come with experience. So if you're still afraid to hold a trade, demo for a while, demo with my trades, demo with my calls, demo. The more you see them hitting TP on demo, the more you'll be confident to just hold your trade, okay? And then don't over leverage. Like I said, this person here who was trading with 0.01, let's say they just sold this trade, they made $32 on 0.01, you know, and they were patient with this trade for 2 days, because this is a 16th, this is a 17th trade, 18th, 19th, 20th, 3 days, okay? And they're good to go. Obviously, this comes with time, and that's why I want to encourage you guys to keep on going on demo. So acronyms. Okay, the last one, the fourth thing. The fourth thing is what pairs, what currency pairs to trade. There are literally 5 pairs that are my top performing pairs. We analyzed this over the last 5.5 months with our team. And in as much as there are some pairs that I really have a personal affinity to, the results statistically were that my best pairs are gold, best performing pairs are gold, US 30, GBP USD, GBP JPY, Euro AUD, Euro JPY. And if you're trading gold, don't trade US 30 in the same account, and vice versa, okay? Any of these pairs, you can trade them in the same account, the currency pairs, but indices and the metals do not. Now, what I usually like to say is pick 1 or 2 of these pairs to trade consistently. Sometimes I'll give, you know, if I don't find anything here, I'll probably give AJ, NJ. I like them as well. But they're not my top performing. They perform well, but they're not my top performing. And I'll just give other random trades out there that I see good opportunities. When I do that, sometimes just counter check on the charts. But most of the time, if I do that, it means I've seen something, right? But these are the top, okay? So choose 2 to 3 currency pairs and trade them consistently. I remember talking to somebody and they were taking all my trades at the same time. It doesn't make sense, because if you take all, like this is New York session, I've called US 30, I've called AJ, I've called ECAD, I've called USD CAD, I've called GU, I've called gold. You have 7 trades open. That's craziness, that's madness, that's insanity. Okay, so don't do that, guys. Just take 1 or 2. Those 1 or 2 trades can pay you. And I realize the only reason why sometimes it's hard to hold a trade, it's because maybe you guys are taking, maybe some of you, not you guys, maybe some of you are taking all the trades at the same time. So just take 1 or 2 pairs at a time. I personally, and this is a true story, I trade 1 trade at a time, maximum 2 trades at a time. Okay. You know, because in case there's a pullback that I didn't foresee, I don't want to get caught up. I don't want to make the hard decision of jumping out of a trade prematurely. Okay, so that's it for today, guys. Please make sure you subscribe to my YouTube channel. So that being said, guys, thank you so much, and see you soon. Bye.